Barrel rolls is the reporter thrown into the secretive world of the Forex Super Model, where nothing is as it seems. Beware the techno monk, and steer clear of Professor Code and his two assistants. Give the senior trader a wide berth, and don't expect any sense from the risk manager.
Good morning, I'm Professor Code and this is the Forex Super Model daily briefing for Monday the 4th of January 2021. So Happy New Year. Here we go then. What's the time? It's just coming up to 5 o'clock in the morning, 0500 here in the UK. Asian sessions coming to a close. European session firing up, and our lunchtime is the American session. So let's make a start then. So messed up trading week, last two trading weeks really, with the Christmas period. Last week, Monday the 28th of the 12th to Friday the 1st of the 1st, market closed on the 1st. The weekly flows were as you can see here at the top. Excuse me. Right, we had the pound as the unopposed positive driver at plus 272, so we had no backdoor flows at all. The dollar was bearing the brunt of the weakness at minus 176 as the negative secondary driver. The flows were coming out of the euro to a lesser extent, and also the yen. So that was the position of last week then. So we had pound strength to the detriment of everything else, and mainly excuse me again, it's morning syndrome, mainly dollar weakness. So that was last week. Now we've got intraday flows, which are the most up-to-date flows we've got. So these are from the beginning of trading today, Monday the 4th, to about 15-20 minutes ago, and you can see we've got an identical batting order. We've got the unopposed driver in the positive driver in the pound at plus 89, and then we've got no backdoor flows, purely front door flows coming out again, mainly of the dollar minus 75, and the euro and the yen staying fairly locked at minus 10 and minus 4 respectively. Now what's going to knock all this around then? So let's just have a quick whistle stop tour of the economic calendar and so forth. So today is light, basically. It's a light Monday. Tomorrow we've got German retail sales and US PMI manufacturing. So we've got euro and US data tier 1 coming in tomorrow. Wednesday we've got German CPI and US minutes, FOMC minutes. So that's quite a significant event on Wednesday. That'll be our evening time in the UK. Thursday, Euro retail sales and US service PMI. And Friday, we've got the non-farm payrolls, NFP, and the CAD Tier 1 data, the usual tag on CAD Tier 1 data. Now, looking slightly over the horizon then, next week we've got significant US data. So if we're boxing this in then, today's going to be light, but we're swinging into important euro and dollar data, and we've got the minutes on Wednesday, which will likely normally viewed as significant, and next week we've got US data to the detriment of most other things. Right, so let's try and wrap this up. So what's been happening now? Basically, this situation when you've got an unopposed positive driver, in this case the pound, normally means one of two things. It normally means that the pound in this case will be at a peak, so we'll be looking at a top of some sort in the pound complex, or it's a continuation of a ramp up in the pound. So we'll talk about that around the other stuff now. So basically, What's been happening in the other markets? Well, equities are sort of at an indecision stage at the moment. They look poised to go higher, and that's what we can say really, with the US equities all sort of resting and looking like they're poised to spring up. So you've got Wall Street, the Dow, Tech and S&P 500 all in similar positions at these highs. Now, so the question we need to ask ourselves today is, being a light day today, the markets will do one or two things. They'll either just say, as we run into Tuesday and Wednesday, which is euro and dollar data, they'll either just say, let's not rock the boat, let's just keep pushing these flows. So we're likely to see a continuation of these flows, which means dollar weakness, pound strength, and euro and yen sort of in a state of dynamic static equilibrium. So that's one scenario. And what evidence have we got for that? Well, if you look at the gold market, which is always very moody, but nevertheless, gold has gapped up. One thing gold traders don't like is a strong dollar or rising dollar or whiff of a rising dollar. So and gold is like being bought like the dollar is going to be soft. So that's some information that might tie in with the soft continuation of the dollar. What else? Oil looks like it's in the go mode as well, and quite often there's there's a correlation really with negative correlation with oil as well. So gold and oil, if they're moving up together, you tend to get a weaker dollar. So that's the evidence there. So right, let's get off the fence. What's going to happen then? Just be aware that the pound is at quite high levels. However, it looks likely, and by the way, we're not in any trades at the moment. We're sort of fishing around, thinking where we're going to pounce. So, but it looks like we're going to get a continuation of this sort of scenario. Pound strength, dollar weakness. The euro yen is an interesting one. The euro yen has been, if you look at, it's been quite range bound. It's been pushed down to the bottom, near the bottom of the range. If you get dollar weakness, you'll get backdoor flows presumably into the euro, which and depending on what happens with the equity transmission as to the yen. So the euro yen is interesting. So it looks like the euro yen is going to bounce off the back of this this scenario. So the euro yen is a possible bouncer, and that's something to think about. So euro yen's sort of been well, it's been it's been operating, and it's in this sort of range, and it sort of went up here and is back down near this support, which is quite a long-term support. A lot of people are going to be looking at this particularly over the next few days. So depending on what happens as we run into the Fed minutes, etc. So it's a difficult one. Euro yen is something to keep your eye on, but generally probably the safest place to be is selling the dollar and buying the pound. So cable, pound dollar long is probably where the action is going to be today. But be aware, you need to watch your risk management here because of the light day to day. They might continue the flows, or they might try it on because of low liquidity. So that would be our review for today. Watch out for euro yen because it's at a significant point, and the general flows and scenario would suggest long pound dollar would be the way to go. Hope that was useful. See you again tomorrow. Thank you.